Lisa, no problem. You can cut out any time. We hold these webinars all the time, so you can always pop back in, or we can send you a copy of it. And we can get out a copy of the presentation to you in the at the end of the webinar. There's not a problem there. So let's give it just a couple more minutes, see if anyone else, I don't want to have to repeat myself. Okay, I think we're going to get started. And I kind of have a little question for you. Do all those who know my background uh, just go ahead and say yes? If you don't know my background, I'll go ahead and give you a little overview. Luther, you got it. Anyone else know my background? Okay. A few of you don't know my background, and so I'll just go over real quick. I've been in the environmental industry since the early 80s. That makes me a pretty old guy. I graduated from college and went to work for an environmental company, mostly doing remediation. Developed the phase one department in that company, and in 1991 started my own company and ran that company and still do for 28 years. In that company, one of the divisions turned out to be our ERS, and ERS is now its own company and pretty much exceeds the business of phase one. And so we pretty much don't phased out phase ones, and we just focus on environmental data and environmental database reports. I've participated in the ASTM committee since 1991, so about 17 years. About 17 years. Oh, about 27 years. Oh my gosh, I'm really old. And then in around 2007-ish, I was asked by the then director of the SBA out of Washington to participate in writing the standards or current laws for the environmental, for what environmental was required for SBA lending. So a lot of what I talk about today will be focused on SBA lending. Now, if you do SBA loans, send me a yes. If you do both, don't send me a yes. If you just do commercial, send me a no in chat. Super. Okay, so let's go over effective environmental risk management made simple. So now, as we're talking about this, I'm so passionate about what I talk about, I tend to talk really quick. At any time, if you have a question, just send it to me in chat. I'll go ahead and answer that question. But we have a lot to try to cover in a short period of time. And so we'll try to do the best we can. And we'll try to cover as much as we can before some of you have to leave. Excuse me. So, again, ERS is 15 plus years old. We have all kinds of clientele from financial, real estate, environmental, law professionals. We have environmental professionals on staff as defined by the EPA All Appropriate Inquiry, which is very important. And you're going to see where that becomes important. Every single one of our reports that goes out, whether you order it online, it comes out of our office because we touched it, like in an RSRA, where it's just a database report. It's covered with 2 million of environmental errors and emissions insurance or professional liability. Same thing. It's very important because of some of the requirements that went into effect this January 1st, that your environmental professionals writing your phase ones, writing any report, now have to have $1 million environmental errors and emissions insurance. Well, if we're supplying you a database report and we hold the limits of liability on that or don't have the environmental insurance, we hold it to just what you paid for the report, you're not covered. It does you no good. Any report you get that doesn't have environmental insurance that has to do with environmental, you're not covered. It's just general liability. It means nothing. Remember that. And the reason you do any kind of environmental due diligence is to protect your company or bank. So I'm not going to jump on to Lender Check 2 yet. I'm going to jump into one other thing first, and what is really required under FDIC and SBA regulations. Well, let's talk about this because we're trying to help you do effective environmental risk management, and we're trying to make it simple. So what does the SBA require? What does the FDIC require? What does the EPA recommend? ASTM standards, E1527 standards, all those are our standards. They're recommendations. They're not something you have to do. But few years ago, I told you I helped write the standards that have become law under the SBA. Once a federal agency requires something for a phase one or for a commercial loan or for an SBA loan or whatever, then it really translates to being law for every single loan or report that you do. So let's talk real quickly about what the SBA requires, because this isn't necessarily an easy answer, but there's easy ways to solve the problem and make it really quick for you to evaluate it. So first of all, the SBA basically, and I'm going to kind of paraphrase some of this, any SBA loan over $150,000 that is not on their NACE code list of environmental sensitive industries, they recommend or require that you do an RSRA. If you haven't heard of an RSRA, that's record search with risk assessment. ERS does record search with risk assessments. They cost $259. They take about 3-4 days as long as you get us the environmental questionnaire, which must be filled out. Very simple screening. if it's on the NACE code list of environmental sensitive industry, you must do a phase one. It doesn't matter what the size of the loan is, anything. You got to do a phase one. So that's pretty straightforward. Now there's some exceptions to that. All gas stations must have a phase one. And if they don't have good monitoring of their tanks and that kind of thing, then they have to do a phase two. All dry cleaners, whether currently on the subject site or previously in historical on the subject site, even if you only know it's been on for one day, that site has to have a phase one and phase two vapor sampling where that dry cleaner was to do the loan. And that's law, that's requirement by SBA. In addition, as of January 1st, all reports, RSRA, transaction screens, phase ones, some people use transaction screens to replace the RSRA. It really doesn't, but they do. I think RSRA's record search with risk assessment is a much better report. But all of them require a environmental professional, an EP, with the requirements of being an EP as outlined in the EPA All Appropriate Inquiry Standards. And they must have either the environmental professional or the company the environmental professional is working for, they must have $1 million of environmental errors and emissions insurance or professional liability. Now, if you get a policy form from an engineering company that says, hey, we have $1 million of professional liability insurance or errors and emissions insurance, but it doesn't state environmental on that insurance certificate, you don't know if they're covered. And most likely they're not. I've called on hundreds of these, and about 50% of them, they don't have the environmental rider. So anything they do for you, including the phase one, means nothing. It's worthless to you. It doesn't do your due diligence. It does not cover you. If they make a mistake, you're left hanging. You need to check their policy, and if it doesn't say on their insurance certificate, they always have the broker name and phone number, just call them. Hey, do they have the environmental rider? Yes or no? If they say yes, they're liable for it. Note it down on the certificate, file it away. If they say no, oh my, you just used the wrong person. So you've got to be really, really careful. So basically, the SBA's made it really simple. So I would use this formula. I'd put this formula in your procedures for your bank, and I would use this to decide whether I need a phase one, what I need. Now, we've made some of this simple because jumping to an RSRA and jumping to a phase one is very costly. And you should really screen your properties and see which one. Now, keeping in mind, EPA All Appropriate Inquiry was designed only to protect somebody from CERCLA liability. That's it. Basically, if you follow those procedures or standards and do the phase one that way, if down the road, and nothing's found, if down the road, you being the owner of the property, they find out your site's a CERCLA site from nothing you did on the property, then you're relieved of the liability and EPA won't go after you. It doesn't cover very many circumstances. How many properties really become a Superfund site? Very, very, very few. So one out of, 10,000 phase ones maybe. maybe even 100,000. But it doesn't, nobody, that's their only requirement why you should do a phase one. They don't require you to do a phase one. Does FDIC require you to do a phase one? No, FDIC requires you to do some sort of environmental check, which is undefined. They want something in the file. So it's really got to be based on bank policy to protect the bank. So let's talk about what kind of environmental due diligence really works. And we've designed a whole bunch of products, all designed by environmental professionals to help you do it and start out very inexpensively. You don't have to just say, hey, I need a phase one, but you need to say, hey, I'm going to go through this in a methodical way, and I'm going to write this into my policies. And so one of the things is a stepwise fashion. So let's call it a stepwise fashion. So what we recommend for all banks, and we have a lot of clients that do this, is that every property that walks in the door, run a lender check to. Why run a lender check to? Well, first of all, it's a very quick screen. That's all it is. It's going to tell you what's adjacent to you and what's on your side and whether you've got anything that's going to concern you. The cover of the report, as you can see here in this screen, right away says the risk rating is high. Oh my gosh, that's bad. A high risk rating is bad. So basically, this is $39. We can set you up on a subscription monthly or yearly that you have an unlimited use for a certain price. And we only adjust that price once a year depending upon your usage. So if we figured your first year you're going to do 1,000 of these, your first subscription price will be based on 1,000. The next year when we renew that subscription, if you didn't use 1,000, we're going to lower your subscription price. If you use more, we're probably going to up it. And we're going to work with you on this and make it work for both of us. But the more, of course, the more you use, the less cost it's going to cost you. So, you know, it's very inexpensive, very quick. So we think you should run it on every report, because right away you're going to know whether you need to do a phase one. You're going to need to know if you're going to need to do a file review or an RSRA or anything like that right up front before you get involved in this loan. And that's going to save you time and money down the road, because let's say you get to the end of this commercial loan and all of a sudden your underwriter says, oh my gosh, you need some environmental. You do some sort of environmental and go, oh shoot, I need a phase one. Now you got to ask your client for $2,000 in another 2 weeks. And this report will tell you up front and stop all that. And you may lose that loan if the client doesn't want to pay for a phase one. Or maybe your bank has to pay for it. And if you lose the loan, the client decides to go to another bank because it's getting all too complicated and too long. Guess what? You just lost all your costs for appraisal, time, credit check, all those things. The other reason is this is just like a credit check. It's becoming the norm in the industry. We're the only ones who have this 5-tier environmental risk rating. And the risk rating is just like a credit check. It gives you a number in order to have an idea. So it's either going to be low, medium, high, or high. And 1 through 5, right? 5 being high, not a big deal. But it's going to tell you right away. So you're going to start figuring into whether you want to do this loan or not right in the beginning. And it all states recommended next action. You don't have to look any further than the front cover if you don't want to, especially if you have no environmental experience. If you have environmental experience, the report's very user-friendly and very simple to review. And at the end, if we have time, we'll go through a lender check too and look at it. They're a true, simple pre-screening without any guesswork. You don't have to get. Now, one of the things we offer to our clients is any report you get, you have a question on it, you want to know why it's high, and you can't look in the report and find out why it's higher, you don't understand, it's okay. Call us up. We've got environmental professionals on staff, and we would love to work with you and help you, and that's free. Any advice over the phone is free. We love helping you. We can look up your report you got. It's easy. This report's delivered to you in minutes. It identifies any potential environmental concerns early. It's slam dunk. It's an easy deal to do. It's fun. It works real well. So, this is your process of determining what you need to do on a property. So, if a lender check 2 comes back, anything other than low, you need to do what it says in next step actions. In medium low, it says you probably need to do a file review or interview to make sure what's made it medium low isn't a problem. And it recommends that you give it to your environmental person on staff or your environmental consultant and let them do that for you. So if they can clear this thing up and make it low by doing a file review or doing an interview and finding out more information by calling the owner or whoever, and they can clear it up, and there's no reason to go any further report, look at how much money you saved your client. Look at how much money you saved the bank. And by having the environmental professional review it, their insurance stands behind it. Real simple, stepwise fashion, really important. So now, let's go. You've done a lender check 2. It's come back high. We're recommending you do a phase 1. So in this process, the lender check 2 really determines what you need to do on this property. We automatically just do a phase 1 always. Now keep in mind, remember, we use the NAICS code. I would still, even if your site falls on the NAICS codes from the SBA, and we can send you that list, all you got to do is request it from Susanna Lopez. So it'd be Susanna L at reccheck.com. She'll send you the NAICS code list. You can also look it up, sba.gov. But that NAICS code list, I would still run a lender check 2 always before I did a phase 1. If the lender check 2 comes back, no matter what it comes back higher than low, then I would go ahead and still go straight to the phase 1. It doesn't matter what it is. I go straight to the phase 1 based on the NAICS code. And that's how it's set up your policy. And we can lay this out for your bank how you want and help you with your policies and refashioning your policies if you want. So a lender check, let's just say it comes back medium low, medium, and you have someone on staff, or you want a more detailed report before you send it to your environmental consultant to review. Well, then the next level, and I think I already talked about that. So the next level is, oh, excuse me, I'm sorry. We'll come back to this. The next level would be a lender check. And I don't have one here, so that's okay. So the next level would be, if you wanted more detail, would be a lender check. But let's say it's not on the NAICS codes, and let's say it's not on the NAICS codes, and this one in particular is saying do a phase one, what can you do as an intermediate step? Or let's say it's a medium or medium high, what could you do as an intermediate step? Well, if it's not on the NAICS codes and the loan's over 150,000, what does the SBA recommend? They recommend you doing a record search with risk assessment. So before I move on, I want to ask, does anyone want me to show them just really briefly the lender check 2 report? If you do, just say yes, and I'll go ahead and show you real quick. We can send you a sample of a lender check 2 report later. Very user friendly. You can see how it works. It's easy to use. Yes, you got it. So I've got a yes from Luther. I don't like this one, so I'm going to pull up another one. Okay, this is a lender check 2. This one happens to be medium. It basically says have an environmental professional review the listings in the lender check report and determine the next step. Because it's probably going to be a file review or some sort of historical review can probably clear it up. But what's really easy, it's really easy to get around this report. First, verify that we've got the right location. You put in the right location number because you don't want to waste any time reviewing something that happens to be another site you did or something. Then you go click on the left side to bookmark. Bookmarks, you can get around the whole report by clicking on it. So remember, I mentioned the 16th of a mile map. You should bop to that right away. On all our maps, we map all the sites of the listings on maps. And so in this case, this is the site listings. Remember, it's just a screen, so it's just going to show you what's right around your property. And in this map, you can see yellow, green, red. Green is good. Yellow is the agency didn't give us enough information to determine whether there's a concern on the site, whether it's open or closed or anything. So that is what you need to have more detail on, or you need to have an environmental professional look into. Red is flat out bad. Red is an open case. Red is a big concern. In this case, your site's listed with yellow and your site adjacent sites listed in a red. If I was to review this, I would review the details on map ID 1, which pertain to my site, and if there is anything on there that concerned me, I'd recommend you do a phase 1. If I was the environmental professional reviewing them. They shouldn't charge you more than, gosh, maybe 50 bucks to review this rec check report. But you can also make that determination yourself if you've got a little experience reviewing things. This site has a listing and a permit for a monitoring well. A monitoring well is only on site. A monitoring well is only put in if they suspect there's contamination on the site. So in that case, this is the site that the loan's being on. Right away, I'd go ahead and do a phase 1. Keep it in mind, ERS does not do phase 1. So again, it's very easy to get around our report. They're fairly self-explanatory, but the first report you do receive from us, if you want us to go through it with you, tell you everything, how it works, everything that's listed and why, we'll be glad to help you with it. Where you find the definitions of the database, like what is TRIS 90 US, all those things we can go over real quick with you. But again, for the most part, right on the front cover, it tells you what your risk rating is and what you need to do. And that's what I do. Now, we also work jointly with local environmental firms, and they can be your environmental firms. Whereas when we set you up on a monthly or yearly service of unlimited use based on licensing, when you order a report, a lender check 2 or even a lender check, and it comes back anything higher than low, we can set it up so it's automatically sent to your environmental professional, who then at the same time it's sent to you. So then they can call you up and provide you with great service and tell you, hey, this isn't a problem, this is a problem, and I need to do this to clear the problem maybe, or you need to do a phase 1. And that saves you time and money. And we work with a lot of environmental professionals across the country with their banks that they do environmental consulting with, and people just love this because it just speeds up the process, makes it clear, and makes it really. We also work with the environmental professionals in the bank. So same difference, but it works real well. But the lender check 2 is really, really user-friendly. So easy report, nice report. You saw the 16th of a mile. It's really nice. This is the NACE codes, very self-explanatory. We will send you this list, but if your site falls under one of these NACE codes, then it's by the SBA, you're required to do a phase 1 to get an SBA loan. Man, I think it makes sense for commercial loans. There's a reason they're doing that. They've had a lot of problems. That's self-explanatory. We already talked about all this. Record search with risk assessment. I'm going to pull up a record search with risk assessment, and we're going to go through it. We wrote this, and we think this report, and we designed this report. Remember, I helped write the law and the standards. It's great for non-environmentally sensitive industries. That means anything that's not on the NACE code, listed in the NACE code. It does, all the conclusion is it's a low or it's a high risk determination. It could be low or, oh gosh, what other terminology do people say? Elevated risk. Doesn't matter, same thing. It includes an environmental professional review of the same database I showed you, lender check 2, but the more detailed lender check, and historical sources, and the environmental questionnaire. Now, when you order a record search with risk assessment, and this is your next step before doing a phase 1, remember these cost $259, very inexpensive. A lot of firms charge more money than that. We don't need to. At the beginning of the year, they required copies of the aerial photos and historical research you did in the appendix because people were kind of cheating the system. We'd done it from day 1 and never had a problem. And so we didn't need to charge more because we always included those things in our record search with risk assessment. But if you're not having it reviewed by the SBA, it's just for in-house, you still want that data. Keep it in mind, you want this done by somebody who has the environmental insurance, and it's got to be done by an environmental professional. Otherwise, you can't just stand behind this data. We have in the house of our in-house EPs who do this. So we do it for you. That environmental questionnaire is very important and usually the hardest thing to get because you're trying to get the current owner of the property to fill out what's been done historically on the property. And that sometimes takes time to get. And it's usually what holds up this report. If you don't have your own in-house environmental questionnaire, when we send out the initial email that we got your record search with risk assessment. We include a sample environmental questionnaire of ours that you can use and ask all appropriate questions. Let's really quickly go over the RSRA report, and I'll show it to you. And this is your standard SBA record search with the risk assessment. There's your site location. You always want to check and see that it's your site. And right up front, the environmental risk determination. It's different than an environmental risk rating, like a credit report. This is specifically what an SBA record search with risk assessments for. And again, this report is far superior because it has far more history in it than a transaction screen. So in a transaction screen, in most cases, it's going to cost you more money and you really get less for your money. So you should always, in place of a transaction screen, do an RSRA. Now in RSRA, this says low. You don't really need to look any further. You don't need to do a phase one. You didn't find anything. You've got an environmental report that has standards that are from the SBA that you can put in your file, and you can rely on this information. It was designed to make sure, for the most part, most major concerns aren't going to be missed. Nothing is 100% sure of no environmental problems on a site, but for the money, $259, this is a great deal for protecting you and your client, your company, and your bank. So here's the site facts right up front. Responsible persons, conclusions and recommendation. Basically, it goes over what we reviewed and whether it's a low risk or high risk. So the questionnaire, even though it had floor drains and grease traps, they didn't have any environmental, they didn't have any chemicals that were hazardous materials. So they didn't have anything or use anything on site that was an environmental issue. And so the grease trap was probably a restaurant, and floor drains isn't a concern. We went over aerial photos. We got all the way back to 1937, first development. Why is first development so important? You need to know the history of a property that goes back far enough so you know there's never been anything done on that property, like agriculture, manufacturing, automotive repair, dry cleaners, anything like that. And so if you get back to first development, you got it. Now you can get that in the questionnaire because maybe it's a vacant land and you don't want to do phase one on a vacant land that's never been developed because you're not going to find anything. It's that simple. But that's why an RSRA is good, because we look at aerial photos, we look for staining, dumping, all kinds of things, buildings, anything, and we can prove that it's never had anything built on it at a certain point. In this case, it was 1937. So no risks were identified, so that's a low risk. Historical fire insurance map. Because it was a rural site, there was no fire insurance map. Fire insurance maps only cover you in mostly old downtown areas, not rural sites. Historical city directories. Pretty much we use the reverse directories to get the history on the property and see what the site was. In this case, from 1960 through current, it was a United Presbyterian Church. Great information. Also, we take this and we sum up the history real quick, and we'll get to there. We called the assessor's office because we didn't find out what it was before 1940, and we wanted to see if there was any other information, and we found out that there was a building permit that this site um, the building was transferred from another property. Pretty neat. Then it was reviewed. This sums it all up, overall risk, and it was a low risk. So you've got all the background information you really know, plus you got the whole rec check report in the appendix, and our limits and liabilities. Don't limit it to our report, but limit it to the coverage of our insurance. And we don't say don't rely on this report. We say rely on it. You've got to read the limits and liabilities on any report you get from anyone and make sure they're not covering themselves so much that you're not covered. So that's an RSRA. Anybody have any questions on an RSRA? Give me a yes or no. Super. Anyone else have any questions? Lisa, did you leave us already? So here's an environmental questionnaire. A lot of this came directly from the SBA regulations, and then we added some things that happen to be pertinent to properties. We'll be glad to give you this. Phase 1 ESA overview. I'll do that really quickly, but what can I say? What should you expect in a phase 1? When you order a phase 1, what should you expect? So basically, it's not a product or service phase 1 offers, but if you don't have an environmental consultant that you know in your local area, you go ahead and call us or send me an email, and we'll recommend a couple for you to get a bid from. All environmentally sensitive properties based on NACE code should do a phase 1. What has to be included in a phase 1 according to all the standards, remember there's 3 main standards now. You've got the SBA standard, the EPA all appropriate inquiry, and ASTM standard. And for the most part, they're pretty much the same. There's got to be a site walk visit by an environmental person or under the direction of an environmental professional. The whole thing's got to be done and written under the direction of an environmental professional and signed by an environmental professional with environmental insurance. Complete historical research, at least back to 1940 or first development. Little bit of geology and hydrogeology, and that's important for groundwater contamination and vapor intrusion. Regulatory research, and that's why environmental companies buy our database report, because they use it to fulfill this requirement. And that's what we sell to. We sell both the historical research, aerial photos and that kind of thing, and the database information to environmental companies to write phase 1s. And then interviews and document reviews. So if there was already a phase 1 done, a tank pull, a closure, all those documents need to be reviewed and should be in the phase 1 report because you're based off of facts. Keeping in mind, there's several kinds of interviews that need to be done. Owner, buyer, seller, user of the property, all kinds of things. Including if the site's listed for things and there's an open case on it, you may call up the case manager at the agency and do an interview with them to see where the site's at. So here's a risk management program. We've kind of laid it out. We'll send you a copy of this. It's easy to flow. This is just one thing. We can fashion this and redo it for you to make it fit. And then we can set you up for all these reports through the RSRA and help you get your phase one done again. And if you ever have a report you got a question on, whether it's one of our reports, whether it's phase one that we didn't do, anything you want, uh, send it to me. Ask me a question. We'll have a little conference call, and I hope I can resolve your question. And again, any phone calls are free, and we'll help you any way we can help you. Okay. Does anyone have anything else that they would like me to cover a little more? I didn't hit on everything, but I think you got the gist of how we can help you and how we'd love to work with you and set up a program to take care of your environmental due diligence. Go ahead and write me in chat if you do. Meanwhile, I want you to know we have a life of loan program where basically all your commercial loans, doesn't matter whether it's SBA or not, that you currently have a loan on, every quarter we'll run environmental risk analysis on that, on all the properties, and we'll tell you if their risk has gone up or down from the previous quarter, so you can check on it. If it's gone up, you want to check on it. If it's gone down, that's a good thing. If it stayed the same, then there's no issue. And we check everything every quarter on those properties, and it's one flat rate fee for the life of the loan. So if you hold the loan for 20 years, wow, I guess you just got a bargain. But we run those things, and you don't have to interpret the data. We interpret the data and give you red flags if you have a red flag problem. And an example of that would be, let's say you've got a strip mall loan, and they just installed a new dry cleaner on the site that used dry cleaning fluid, perchloroethylene or PCE. Well, that's a concern to your property, and that's going to make your risk rating go up. And you need to know about it. And you probably don't want them to do that if you can stop it, but you sure as heck want to know about it because you may not want to carry that loan anymore. In fact, I'd probably sell that loan. But anyway, we'd be glad to consult on you that. And so it's a one-time fee, and the fee is just a little higher cost than an initial lender check that has to be run on the property, and you get life loan checks. And so when you get this list, anytime something drops off your radar and you don't hold the loan anymore, you just let us know and we'll take it. But every time you do a loan, you just send us the address, and we take care of it for you and add it in and make it part of the life loan process. So that's another thing that can be in your bank policies for doing your due diligence. So if there isn't any questions, I'm probably going to cut this thing and call it, close the webinar. So anyone got any other questions? That went pretty quick. I think it was a pretty good, I think I covered everything you needed covered. Thank you. You're welcome, Luther. Anyone else? Thank you very much. Appreciate it. Have a good afternoon, and I hope you attend another webinar.